Right on. Well, welcome back to The Upside. I'm joined today with Dylan Reber, back in the studio. Thanks for joining me again, Dylan.
Great to be back, as
Yeah.
always.
Today we are talking more about the industry and kind of getting into the business and how you are just absolutely killing it these days, and how a lot of advisors potentially aren't. And so a bit of a transition from what we normally talk about, but I think we've gotten a lot of requests from a lot of people asking about kind of how we're getting so much success. So that's ultimately what we're going to talk about today.
Yeah, it'd be cool. Something a little different, eh?
Yeah, exactly. I wanted to start with kind of a little bit of your background. Most people know you as, you're obviously extremely knowledgeable, kind of in this industry, but we all, start from, kind of scratch, finishing university and kind of getting into things. And over the last couple of years, when you first got in the business, you worked for a guy who'd been in the business, 25, 30 years, and you've actually been able to surpass what he accomplished in that period in only a couple of years. And so, I just kind of wanted to start off with getting a bit of a background and kind of what you feel like has allowed you to become so successful so quickly in this business.
Yeah, I think short answer is basically education and expertise and experience, right? This industry probably more than most others. I know a lot of people like to, make fun of university and stuff these days. Totally fair, I think, in a lot of respects, right? If you're going just to get a piece of paper and, C's get degrees mentality, that's probably not super helpful. But if you actually go and study and you actually care about what you're learning about and you actually learn it, theoretical knowledge, academic knowledge transfers very heavily into this industry because our whole job is advising, right? And if you're not drawing on anything other than, well, I've done it this way for 20 years, therefore it must be right. That's nothing. You could be wrong for 20 years. So I think the big thing in this industry is if you actually know what you're doing and you do a good job for your clients, the sales, getting more clients, more success, whatever that metric of success is, that follows, right? That'll naturally come from just being good at what you do. I think that's true of all industries, but ours especially.
Yeah, no, it makes perfect sense. And so, I mean, you partnered with us now kind of a couple of years ago. Things have really kind of taken off for you. I guess, where did you find kind of that came from when a lot of advisors are kind of struggling and they're not getting clients or people aren't kind of how are you building things and where do you kind of attribute all that success to? So education you kind of mentioned.
Yeah, I mean, that's a big one. I mean, obviously you have to get people through the door to actually be able to show off your education and your knowledge, to actually start doing the work for them. You show me social media was a great way to do that. And that's something that a lot of other firms, like the one I was at before, they were just maybe starting to think about adopting when I left. That was part of the reason I left is, it was very restrictive, and part of it comes to, the industry regulations around talking about this kind of stuff.
And some of them are industry regulations, but some of them are dealer, rules where they take the regulatory rules, but they apply their own, kind of version
make it more
to
stringent.
They make it way more stringent.
Yeah.
And you have a lot of those restrictions, right?
And that's, that's one nice thing is being able to be fully independent. And then, go as long as you're not saying wrong things or lying or whatever, as you're a lot more able to have the types of content, create the types of content that people need to see, because for the vast majority, so much of what's out there is kind of crap. So if you can be decent, I watched, I want to say it was Joe Rogan. There was some other podcast that I watched where they were talking about how one of the guests was saying it's basically never been easier to get ahead in today's day and age, because what used to be considered a lot of work is unfathomable. What used to be considered the regular amount of work is considered you're working as hard as you can possibly work, right, these days by today's standards. So if you just work a little bit harder than everyone else around you, you can get ahead. If you work a lot harder, you can get really ahead. And so that's kind of true of social media. If you can just stand out by giving good quality advice, or not advice, obviously, but good quality content, good quality education, you can really stand out amongst the crowd of people just giving kind of generic or wrong, advice.
Totally. And there's a lot of, kind of mediocre advice that's out there. And a lot of people that just never really commit to education, right? They finish university, they get their basic like licensing exams to get into this business, and then they feel like, okay, now I'm done.
Yeah.
And for me, it's like when you get into this business, you get your basic licensing stuff done, you have a university degree, like you're just getting started. I always make the equivalency of it's like passing the bar. Like, yeah, you have great general knowledge, and passing the bar is by no means easy. But you're not an expert, in any one area of the law. And you talk to any lawyer, it's like, yeah, well, I know a little bit about everything, but I don't know a lot about most things, And so it's now is where you really kind of have to specialize and do all of those additional designations, which is what you've done, and you're continuing to do more. So why don't you walk us through, kind of which designations that you did, I guess, that you've found the most impact, and walk us through kind of what you're doing now additionally.
Cool. Yeah. And just in case this hasn't been made clear, like the sales part is really important, social media, anything you can do to get clients through the door. But I do genuinely think the education and expertise part that's what is going to generate a reputation for you. It's what's going to make you stand out over the long term and be able to do a better job for your clients, which then you get referrals. And that's how most advisors grow over the long term. For a big part of
professional advisors. Yeah.
Right. So with that being said, the designations, first one I started with was CFP. I think we've talked about it. Like, I think we both agree that should probably be like the base standard, especially in this day and age where, there's robo advisors, there's so much do-it-yourself stuff out there. Like the bare minimum, the CFP, at least that's a graduate level program. It has a certain amount of experience requirements in addition to the actual relatively intensive, that's I feel like a solid intermediate level of knowledge on all of the stuff beyond investing.
Yeah.
That's a common misconception. A lot of people think CFP is like an investment designation. It's really not. It's everything but that. It's all the other important
There's
stuff.
a little bit of investing, but it's more asset allocation.
It's
type
investment
stuff,
planning, right? It's like if you have short-term goals, you should have investments that align with that kind of stuff and those types of very broad things.
Yeah.
You're not getting into like the nuances of diversification and portfolio building management,
really, specific asset classes,
security,
correlation, and
right. So CFP is great, and it's a huge value add, I think, because especially in this day and age, especially with more people doing more index style investing, and it's getting harder and harder every year, every day to beat markets without really extremely specialized skill sets and knowledge and time devoted to that. That all the other stuff, the tax planning, the retirement planning, budgeting, debt management, risk management, estate planning, all those broad pieces of which there's many, many sub pieces to look at. Goes such a huge long way in helping clients have more wealth, right? That's, I think, probably the main reason behind those statistics that show that people who work with advisors end up wealthier than not. It's the training and the psychology management aspect on the investment side, and it's all the other stuff that you don't see it on a performance statement, but saving a few grand in taxes every year goes a long way. Totally. The money you can save and invest.
Yep.
So that's CFP, Certified Financial Planner. That or like some type of, I'm partial to CFP, but any kind of financial planning designation that's kind of on a similar level, I think that's a great place to start, right? When you're talking about people coming out of university, if you're getting a finance degree, by the way, that's a huge, huge step up, because at that point, taking your basic securities course and stuff will be basically just a review of what you've already done.
And I think to an extent, I think a lot of people overestimate the quality of like a finance degree, in terms of specific to like one industry, because it's so general. Like there's no downside to getting a degree other than that, if you're taking on massive debt to do it. But when you're done that, industry specific designations are so much more valuable because it's actually specific to what you're doing, as opposed to all the general education courses and all that kind of stuff, like what I call the filler courses. When you do a degree, you've got maybe 4 or 5 actual courses that are super, integral, or that's the wrong
integral,
term.
Yeah.
Integral to your education. The rest is just a lot of filler,
And I mean, if anyone's watching who's like not gone through university yet, so you still have time to change it. I was lucky. I knew I wanted to do this since I was like 15 years old. So when I went to university, even before university, I started taking economics classes and just reading stuff on my own time.
Yeah.
But instead of doing wine science and other random options, I took economics as like my minor, and then I took a bunch of accounting courses and a bunch of real estate courses in addition to my main finance course load, because I knew that all those things were relevant to what I wanted to do.
Yep.
Most people, you're right, don't have that luck, frankly, to know what they want to do that young. So yeah, I mean the specialized industry courses, and it's so important.
Yeah.
And to your point, like, or building off your point, figuring out what you want to specialize into goes a long way. Like I said, I think the CFP is a great base. I think that should be the basic.
So you did your CFP first.
Yeah.
What'd you do second?
CIM, Chartered Investment Manager. Long term, one of the things I'm planning to do at some point is CFA. I've got all the textbooks and I've read them just kind of for fun because I'm a nerd. But at some point, I'll actually take the courses and the exams and stuff. But the CIM is great because that's your investment management degree, right? Now we're talking about more nuanced, complicated investment strategies, security valuation, portfolio building and management, that kind of stuff. And I think that's such a great pair to have for, like, I think if you have your CFP and your CIM, you've got to be in like the top 1% in terms of education anyways of advisors, because now you've got specialized knowledge, like graduate level industry specific knowledge in investment management and financial planning.
Yep.
Which now you can really well serve most clients until you start getting to like the really complicated stuff that we kind of tend to work with, like international stuff, like cross-border stuff, and like ultra high net worth where there's family office things going on, that kind of stuff.
Yep.
For regular retirees, people trying to grow their money for retirements, the vast majority of people, CFP and a CIM is a great combo.
Totally. And I always tell people, like, in your very first year in this business, go get your CFP done, go get your CIM done. There's no reason why you don't have enough time in a year to do both of them, and then you have a great, kind of foundation to kind of build on, right? So you did those ones. And the other advantage of the CIM too is then you have the ability to do, discretionary management.
Yeah.
Which, as you're building a growing practice, you want to have discretion. You want to be a fiduciary, kind of wealth manager. Clients want that, again, combined with being, kind of fully independent. But there's just a lot of clients, right, that are going to require that because they have, kind of insider information or, professional accounts or whatever it is from certain positions. So one, from a practice management standpoint, and then two, when you talk to higher net worth or ultra net worth people, they need a portfolio manager.
Yeah. Well, I mean, like, what time is it right now that we're filming?
4:36.
Like, it's 2 hours after 2.5 hours after the close of trading, I'd still be placing trades right now if I did not have discretionary authority, right?
Yeah.
Because it's just so much work, so much additional work to do that. That's then time you could spend building more complicated plans, getting more clients, doing anything more productive, right?
Yep.
In my case, like studying.
So what are you working on right now?
Yeah. The other one I have is the CIWM, International Wealth Management, just to finish answering that question. And that's one of those like kind of more specialized courses where you're now getting like cross-border stuff.
Yeah.
Currently, I'm that's what I'm ultimately going to specialize more and more in, is that international and cross-border planning.
Yep.
Super complicated. It's about as complicated as it gets. That's why no one wants to do it. And therefore, I think it's going to be a very valuable skill set.
Yep.
So I'm taking my US CFP, and ultimately I'm actually taking my master's program in financial planning. That's what I'm working on. That's probably going to take another year and a half or so to go through all of that stuff. Along the way, it's nice that you get like shared credits for other smaller designations you basically do along the way. And then that counts for your credit towards your master's degree courses. And then long term, once I get my master's, then I can actually have a reason to sit before the peer review board and start actually presenting my research and trying to get it published and get the PhD, the end goal.
There you go. That's sweet. And then there's another one, a sport and entertainment designation kind of you're working towards as well, right?
Yeah, that's one of those ones that'll be done along the way. I'm really excited for that because it's a very unique designation and program where it's essentially a high net worth program, but then they add a few extra units on top that are specific to sports and entertainers, which is being in international wealth management. It's a big area of it. It's a lot of athletes, a lot of freelancers, a lot of musicians, artists,
especially for Canadians, because anybody, athletes and entertainers, right? There are very few Canadians that stay in Canada. Not everybody's Drake. Most people, don't have a lot of loyalty, and they move to the States because that's where there's a lot more, kind of opportunity, especially in those fields. When it comes to athletics, I mean, the odds of you playing for a Canadian sports team, if you make any of the big leagues, is quite low.
Yeah.
Right. So most of them end up in the States. So yeah, having that specialization, I think, is huge too for a lot of what clients want from you.
Yeah, understanding like the really advanced strategies, beyond RSPs and stuff like that. both in Canada and in the States, and then reconciling all of our tax laws, our rules, our different plan types that are sometimes recognized, sometimes not recognized across the border. Yeah, that's kind of the long term what I personally want to specialize in.
Yeah.
If you're getting in the industry or whatever, if you're looking for someone in the industry, right, then look for someone who's got the specializations that are going to be relevant to what you need, or if you're an advisor, the specializations relevant to the clients you want to serve.
Totally. Yeah. No,
There's so many out there.
Oh yeah. So why did you, because you were working for another advisor for a while when you first got in the business, you got some training a little bit under you. Why did you ultimately decide to stop working for someone else and say, you know what, I'm going to take the bet on myself and partner with a firm where I can build a business for myself?
Great question. There's a lot of answers to that. I think the biggest one is I've always kind of been more of a self-starter and wanted more control over what I'm doing. A big part of that was, the firm I was at formerly being told to kind of like maybe get your CFP and then cut it out. Stop with this research nonsense and master's degree. What are you talking about? Who needs that? Just pick up the phone and start, selling insurance policies and stuff. That was a big thing that drove me away from where I was, and realizing that that's how most of the large firms are set up, because that's what they care about is profits. And I mean, I'm not going to fault them for that, but that's just the way it is.
Yeah.
So being able to go independent and, follow my thesis, if you will, that the sales will come if you learn more and you get better and do a good job kind of thing.
Yep.
That was definitely the biggest one, I would say, is the freedom to, not have like sales quotas and stuff to hit. Just, like you guys were very supportive and everything too. And saying like, like you want to get more designations. That's awesome, because you recognize that that'll help over the long term.
Totally.
And the other part of it too, just being able to better serve clients as well, just in terms of, it's just again, another fact of the matter. As firms get larger and larger, they necessarily have to become more generic, right? They have to have more standardized processes, more standardized types of products that they are allowed, or that their advisors are allowed to recommend, and services that they're allowed to offer, things like that. So being independent allows us, to, as long as we follow the rules, as long as we don't harm our clients, we can do whatever we want. Namely, we can do whatever is best for them, regardless of, whether someone else thinks that product should be approved or not approved, or that surface, if you should, a million different things.
Yeah.
It's always the regulations, and not even the regulations of the industry, but like the like you said, the firm specific, really extra stringent rules and products and all that stuff.
Yeah, and in Canada, because so much of the wealth management industry is controlled by like the big six banks and a couple career shops, right? The independent model is only just really starting to kind of take off. Like in the U.S., like that they're 20 years ahead, right? We're so far behind there. So what advice would you give to someone who's like at a bank and they're just like, I don't know if this is where I want to spend my career? Because a lot of people don't. It's a place you get started, but what would you say to somebody who's at like a career shop or at a bank and they're like, I don't know if I should be going, like, should I go independent? Is now the right time? Like, what would you say to somebody like that?
Depends on the person. But I'd say if you don't already have, some of those designations and that good base that we talked about, that's going to make you, because the big thing you're competing against larger firms is the brand name, the recognition, and then whether it's real or false, that sense of security from being with one of those places.
Yep. So
that's what you got to convince clients to, look past. And in order to do that, they have to really trust you as the individual, as the advisor. So I'd say, again, it comes back to education. If you don't have it already, while you're still on salary or somewhere like consistent payment, start taking courses, work nights and weekends, and get that stuff done so you can be much more competitive in that regard.
Yep.
And do it, then I would say I'm a very practical person. And I don't know if I love the advice to just blindly believe in yourself and think you're perfect the way you are. But if you put in the effort to make yourself very good, then believe in yourself, and then take a swing for it. Like everything in life, if you work hard at something, there's no reason why you shouldn't be able to be successful. Just don't skip the hard work part. That's all.
Yeah, no, makes perfect sense.
That's why I look like this at 27. By the way.
The dropout rate in this industry is very high. Why do you think so many people kind of flame out, and yet you have just been thriving?
Yeah. I think down markets are tough. They're tough on everyone. As advisors, right? Assuming you're on like a fee-based model, even if you're not, everyone takes a pay cut when markets go down and they're performing poorly. You take a pay cut, and it's not your fault necessarily, not necessarily your fault. Meanwhile, clients are never going to be less happy with you than during that time, scared, anxious, having the same conversation again and again, explaining, don't worry, stay invested, whatever, all that same kind of stuff. You have those conversations a million times. I think that can definitely weigh down on someone, just mentally and emotionally. That part. And then obviously the other part too is if you're just starting and you haven't reached that scale yet where, you're kind of going to be okay either way. It's like any finance job. You got to put a lot of work in up front and you're going to get paid scraps. So being able to tough that out and stick with it, those are probably the two biggest things. I think that's why people burn out. You've been in the industry longer, maybe you have other insights, but I'd say if you can push past that initial kind of, depending on how hard you work and how lucky you get to a certain extent, that initial 3 to 5 years until you have a good base of clients and they trust you, so you're not necessarily having those same difficult conversations every time there's a blip in the markets.
Yep.
I think that goes a long way.
Yeah, no, I tend to agree. I think for a lot of people, they just have such a short-term focus, right? That they see the industry and they see the successful people in this industry, and kind of what they do on a day-to-day now, but they don't look at what they did, for years and years and years. And it is a grind, kind of at the beginning, because there's just so much information to learn to be a competent advisor. Right? In Canada, the Income Tax Act is over 3,500 pages. In the U.S., it's 11,500 pages.
Something like that.
Right. So if you want to actually become an expert in this field, it's going to take you a long time. And I think a lot of the people just aren't willing to put in that effort because they're just not passionate about it the way guys like us are. Because that's part of what we like about it, is that it is complicated. It is very nuanced. There is so many different things to learn and know and do, and it's just exciting and interesting all the time. And so for a lot of people getting into this business, taking that approach of like, I'm going to do this because it's hard, not I'm going to do it even though it's hard. It's like, yeah, I want to do it because it's challenging. And at the top of our field, there's so little competition, right? But at the bottom of the field, there's, like, I don't know, I don't even know what the proportion is now. I think there's more advisors than there are realtors. Like, maybe that's not true. There's a lot of realtors out there, but like a lot of people get into it. But that's why so many people, kind of don't make it, is because they're not passionate about the educational, kind of component. Which takes me to another question that, when I got into this industry, I got such horrible advice from like everybody, and it's the same thing as you of, why are you worried about education? Like there's a term they use, like, see the people. It's like, yeah, but what am I going to say to these people if I have no education? I don't know what I'm going to do for them. And so one of the questions I had was, what are some of the types of bad advice that you got when you started in the industry that you would say, don't listen to that advice?
Yeah. That one, right? The pick up the phone and start selling insurance and stuff like that when I wasn't even an insurance salesperson. Just the general apathy towards education expertise, focusing on sales. Another one too that I got fairly frequently was, from CFPs, from financial planners who've studied this, and like it's the body of knowledge. It's literally part of the CFP program being taught to. You're not giving tax like accounting advice. Like, you're not telling people how to fill out their tax returns when it comes to like something that should be well under the purview of a tax lawyer. You're not giving them legal advice, right? Sure. But tax planning strategies, right? That kind of stuff. Like, a classic example is retirement drawdown strategies. One of the advisors I worked with, like, literally told their clients, I don't know, like, that's not my job, that's your accountant's job, is like to figure out. It's like, that's quite literally the opposite, right? The tax accountant's job is to file the tax returns, right? Maybe give some tax advice, but our job as financial planners is the structure part of things, right? Yeah. Like the long-term holistic view.
Yeah, the whole strategy and structure and everything, that's on us. Right? That's how we do it. Yeah. All your accountant is doing at the end of the day is filing based on what's happened in the past. They're historians. They're looking at what you've done, and then they're filing accordingly to make sure you're compliant. The advisor, yeah, I 100% agree. You should be doing all the forward-looking planning, structural side of things, and giving the tax advice there.
Yeah, and that was something we were always told to stay away from, and it's like that. But that is financial planning. That's what the job is. So then, what are you doing besides just giving like a retirement projection? That's not a financial plan. That's one part of a financial plan. It's a pretty small part.
Yeah.
So yeah, that was another one that always really bugged me. I was like, what are you doing then? What are you offering?
Yeah.
Yeah.
What value are you providing? Cool. So the reason why you think so many people aren't successful, I guess, in terms of like, and I'm referring more to like new advisors, but there's also a lot of advisors who've been in the industry a long time that still struggle. Do you think it's a skills problem, a prospecting problem, a mindset problem, or kind of all three? And where does that kind of the rot usually start?
It's got to be all three. It's almost certainly all three. I think in my experience anyways, I've been able to mitigate a lot of the emotional problems, like the having conversations because markets just aren't going well right now. I haven't had a lot of those conversations with my clients. I haven't had a lot of issue getting new clients and keeping clients because I think I take the time to do it right from the start. Yep. One thing I'll say, I do kind of want to pick on one area of the industry, like of the base regulations, risk tolerance. It's important. You should be able to measure your client's psychological, emotional biases towards risk. Yep. I do think what's way more important than that, I'm not speaking on behalf of our investment dealer or even the firm. This is just me, but the goals are way more important than that, right?
Yeah.
Should never let the emotional tail wag the investment dog, as it were, right? Like, there's no other area in life where we encourage people to do things based off of like emotional knee-jerk reactions.
Yeah.
I don't know why managing your money is all of a sudden the thing. We're like, yeah, that's the only thing that matters, or the main thing.
Yeah.
My approach to risk tolerance and building client portfolios is starting with the goals, and that's the main focus. Obviously, reactions, emotions, psychology is going to play a role in that, so you have to account for it.
Sure.
But I think you can educate away a large portion of those, especially
like 95% you can educate away. And a lot of times the reason people are emotional is because it's a lack of education.
Exactly.
And it's our job to educate them on that. And then it eliminates that.
Yeah.
Sorry to cut you off.
Well, no, and that's exactly what I was going to say. So, I mean, then I can just say this is one piece of advice I'd give to any advisor, anyone is start with goals. And then before you even talk about risk tolerance, before you have that risk tolerance questionnaire, survey kind of conversation, explain what risk actually is.
Yeah.
Learn it yourself. Understand what is standard deviation, volatility, what is what are all the types of risk that are relevant? What do we mean when we're talking about risk? Otherwise, you go into that risk tolerance survey completely blind. Again, you're answering
They're pretty
questions.
generic questions.
It's like taking an exam before you've taken the course. It doesn't make any sense to do it that way, right? Yeah. So I found a lot of success explaining like, hey, I tell clients all the time, especially like right now with where markets are doing as of filming this, it's like, there's a good chance for like new clients just coming on. It's like, there's a great chance you're starting with me at the peak of markets. And the next few years are not going to be fun. I'm going to do everything I can, but that's just part of it, right? Yep. And making sure you set those reasonable expectations about rate of return, about risk level, about what risk looks like in practice, all that stuff. Because then when it inevitably happens, it's like, okay, yeah, you did tell me this was going to happen. It's not a surprise.
Yep.
Oh, okay, cool. And doesn't mean you're never going to have those conversations, but it's usually much shorter conversations, just a reminder at that point.
Totally. Yeah. And it's just, again, it's all about taking the time to educate and teach people things. But for a lot of advisors, they need that education to be able to, kind of pass that on to other people. Right. So
always comes back to that.
Yeah, no, that's great. And it kind of ties into that, when I asked you, is a skills thing, a prospecting thing, kind of a mindset thing. Like I agree, like it's all so tied together. Like I think it really does come from a mindset, standpoint of like, wanting to be like a true professional in this industry rather than a salesperson. And then with that mindset, you can use that mindset to develop the skills, right? To develop prospecting. And I very much agree with you. It's like, if you know this stuff inside and out, you're naturally just attracting clients, right? If you're posting on social media, right? You're attending an industry, you're attending events, like you're doing all these things. It's like, you don't really very little of our job is sales. anymore.
Thank goodness.
Yeah. Like I can't remember the last time I like tried to, I don't, if you don't want to work with me, don't work with me. Like, it doesn't matter. There's a lineup of people and you've come to that need our services. So it's like, great. We're happy to help you if you want to, because we have all of that education. I think that's what so many advisors are just missing, but so many clients need that. And there's never been more demand, I think, for our services, because the world is just more complicated and intertwined than it's ever been.
Yep.
And tax is more complicated than it's ever been as well.
Amen.
And it's probably not changing anytime soon.
No.
What do you think is missing? We've kind of already hit on this. And I got 2 more questions for you. What do you think is missing from how the industry trains people?
Education.
But it's the right type of education, right? Because we can just say education generically, but I think it's like technical proficiency, not just like this is how a sales process works, or this is how to sell a mutual fund, or this is how to fill out a risk tolerance questionnaire, right? It's more the technical aspects around tax and portfolio construction. Correct me if I'm wrong.
I 100% agree. I think, just more detailed technical information. If people are more educated and more like, if we can make this industry more of a true profession in line with accountants, with lawyers, with doctors, with engineers, right? Part of that, I think, is making the barriers to entry higher in terms of the detail, the technical detail and level of the education. You won't need as many regulations. And then you won't have to learn as many of the regulations and take up time learning that instead of the stuff you need to learn, right? It's kind of like a full circle thing. But I do think that the level of education needs to be increased. Something in line, like we should have, I don't know if maybe the CFA necessarily needs to be the standard, or
CFA or CFP?
Like, depending on like if you're investment
Sure.
manager or finance planner, right? But like, I don't know if those necessarily need to be the standard, but I do think there needs to be more than what currently is the standard to just become a basic advisor.
And that's more from a consumer protection standpoint. From my standpoint, building my practice, it's great. You're going to keep regulations the way they are. Awesome. I'm going to continue to just absolutely thrive, because there are so many just not great advisors, kind of that exist out there. So our practice is going to thrive. Our clients are going to be, well taken care of. But I think, to your point, if we want to raise the standard and the levels just for consumers in general, which I think there's absolutely like a need for that, like Canadians deserve
can't work
that.
With everyone.
Yeah, we can't work with everybody, and that's the way to do that, right? So it's looking at it from like an industry standpoint, it's looking at a consumer standpoint, but it's also looking. The question was originally around like, okay, what does the industry need to change to help the advisor? But I think from a consumer standpoint, I 1,000% agree. There needs to be different regulation.
And honestly, like, it might not seem like it, but I was answering the question. Like, I think they're related, right? If you help the advisor be better for the consumer, you help both of them, right?
Yep.
I think a big part, our industry traces its roots like to just pure speculation and nonsense, right?
And insurance sales.
And it's not even that long ago.
Yeah.
It's not even that long ago, right? That we, like, if anyone has ever seen The Wolf of Wall Street, like, that's obviously an extreme example, but that's kind of what it was like, and so it's no wonder that people, between the fact that like most, I don't want to say it, but I think the majority of advisors have in this day and age about the same level of knowledge as the average person, maybe not the average person, but a lot of people with all the information you can get off of the internet now and from books and everything. And most people are reading at least a few of those things, right? Because they're interested enough in it.
Yep.
That's about on par with what you're getting in terms of the technical detail from your basic licensing courses. So it's no small wonder that between the lack of ethics and the lack of education, at least historically, that people are like, well, yeah, I could just do as good of a job myself. And I think in a lot of cases, they could probably come close. And so I think if you raise the base level of like the average advisor, everybody wins. Advisors, because we all now are grouped together, we're all called financial advisors, right? And so it's like we all get grouped right now together with the people, whether you have like 17 designations and a master's and a PhD, or whether you have your basic licensing course.
And your high school education, you're considered the same thing.
Right? And so like if everyone's raised up a level, Now the base is raised up a level. All consumers are getting better advice. All advisors are giving better advice. It makes the industry as a whole become much more professional, much more trustworthy. I think just everybody wins from doing that.
Yep.
So yeah, I mean, I know it kind of is more helping the consumer, but I think that's because it helps advisors.
Totally.
Right.
Cool. And then very last question for an advisor 2 or 3 years into this business, what advice would you give them today? And maybe they're struggling.
They're struggling. Okay. If you love it, just keep going. Right. I mean, same as anything. Like, it doesn't happen overnight. I think, yeah, I did all the right steps, and I've been studying this stuff and learning about it since I was 15, 16 years old. Not everyone's going to be like that. But so I've got a bit of a head start, and I got a little bit lucky too, right? Just right place, right time, right people in front of me. But, just keep going. Nothing that's worth doing happens overnight, not even in 3 years. But, as long as you can see some progress and you know that you're taking the right steps, it'll happen, right? And yeah, I think following the other things we've already talked about, the education part, getting a bit more creative, trying to adopt, modern tools for like the sales part to get people in front of you to talk about the all the knowledge you have. Just don't stop. It's kind of like generic blend advice, but it's true, right? There's a reason that every motivational podcast out there talks about that stuff. Just don't quit.
Yeah. Yeah. All of the advisors with 30 years in this industry have one thing in common. They didn't quit,
For better or for worse.
for better or for worse. Fair enough. Touche. I like to think that we've talked about this before, this next wave of people kind of coming in this industry now are completely different than people, 30 years ago in terms of like what we're seeing from like students in terms of like, yeah, that passion and that drive and that interest in the educational side of things. Like it's night and day from even when I got in the industry. It's like you're getting some real smart kids coming out of university now that are like, they're doing their CFA. They're registering for all these additional designations. I'm like, yeah, that's sweet. Like, I think the industry is moving in the right direction. But yeah, I like what you said, just keep on going.
Yeah. And that is a good sign. Hey, like, the old guard, as we refer to them, it's like a lot of people who like were in completely unrelated like sales fields. So they're just good at the sales part of thing. And then, for whatever reason they got laid off or whatever happened, made a career switch. And then they just like took that basic licensing course and started selling a different thing, stocks and bonds and mutual funds. And I mean, that they're leaving the industry. They're retiring. And now we're getting such a big influx of every other day. It seems I get asked by like a student from my alma mater or just from other universities, like, yeah, can I talk to you more about the industry? Like, what's a day in the life like? What do you do? And they're coming with a good base of technical skills. To your point, a finance degree, it's only a very first start, but it's a good first start.
But they're doing the finance degree, but then they're also part of like their
they value the
university investment committee.
Yeah.
They're part of these other clubs and different things. And it's like, hey, this is sweet. This is the way things are supposed to be.
Yeah.
I
do think it will become a true profession, hopefully within the next 10 or 20 years. But
well, as long as hopefully we can pave the way for that.
Hopefully, yeah. I would love nothing more.
Yeah.
Right.
Right on, man. Well, thanks for joining me again today. Always great to have you and chat, and we'll see you soon.
Sounds good. Thank you.